Good afternoon, all. My name is Danielle S. Lewis, and I am the chairperson of the Economic Empowerment Committee of the National Coalition of the 100 Black Women Incorporated, Metropolitan Baton Rouge chapter. We would like to welcome you to our second event of this four-part series on building generational wealth through entrepreneurship. We hope you gather the information you need to grow and scale your businesses to the next level. Please enjoy. There will be some housekeeping rules. Please remain on mute. Place any questions in the chat box as they will be answered during the Q&A section. Stay engaged by answering polling questions and answer the brief survey at the end of the event. The moderators for today will be myself, Danielle S. Lewis, the chairperson, and Candy Martin, the co-chair of the Sisternomics Committee. Please join me as we welcome the president of the Metropolitan Baton Rouge chapter of the National Coalition of the 100 Black Women, Madam Courtney Hunt, as she delivers the purpose, mission, and vision of the organization. Madam President.
Good morning, everybody. Thank you, Danielle, so much. It is my distinct pleasure to bring you the purpose and vision of the National Coalition of 100 Black Women Incorporated. Our purpose is to foster principles of equal rights and opportunities, to promote the awareness of Black culture, to develop the potential of the membership for effective leadership and participation in civic affairs, to take action on specific issues of national and international importance, and to collaborate with other persons and organizations to achieve mutual goals, which we're doing today. Our vision is to see Black women and girls live in a world where socioeconomic inequity does not exist. And our mission is to advocate on behalf of Black women and girls and promote leadership development and gender equity in the areas of health, education, and economic empowerment.
The Economic Empowerment Committee. The Coalition of 100 Black Women's economic programs focus on financial literacy, family wealth building, and entrepreneurship. Sisternomics program is a philosophical mindset to consider ourselves first in all economic decisions. Our primary focuses are pay equity, African-American women-owned business growth, and livable wage employment opportunities. And now I will hand it over to Sister Martin.
Good evening, good morning, everyone. Thank you for taking time out of your day to come on and learn with us. And we are so glad and so excited to have you here with us. Really quick before we highlight our speakers for today, I want to ask that everyone, if you're on social media, to please share it. Go to our social media page and make sure you share it, like it, comment, so that we can bring more awareness of our programs and the things that we offer to more of our communities. And so we thank you in advance for taking a moment to share it. So I want to tell you guys really quick about the Baton Rouge Area Chamber. All right. Their purpose is to accelerate economic opportunity in the Baton Rouge area for everyone. The Baton Rouge Area Chamber is aggressively ambitious regional economic development organization with the basis for action. I like that word, action. BRAC, better known as BRAC, seeks to push Baton Rouge beyond the status quo, unleash its potential, and to support a vibrant business community that believes the finish line does not exist. So I like that about that organization. So I'm going to also Let me get the information for TRUFUND. Want to make sure we get their information correct. And TRUFUND is a company that I've had the opportunity to work with as well. So I really like what they stand behind. All right, TRUFUND Louisiana, TRUFUND Financial Services of Louisiana. They have disasters. They help those that have been shaken by disasters in Southeast Louisiana for over the last 15 years. From Hurricane Katrina to Rita to Gustav, and like the BP oil spill in 2010 and the great 2016 flooding, to the most recent 2020 and 21 hurricanes. And of course, the COVID-19 pandemic has created challenging environments for small business owners and entrepreneurs who drive their region's economy. And so that's where TRUFUND comes in to help business owners take advantage of available opportunities, even during the difficult times with funding.
Daryl, you can take the floor.
Thank you, and pleasure to be with you all here today. My name is Daryl Johnson, and I lead diversity and inclusion at the Baton Rouge Area Chamber. We thank you, Candy, for that warm introduction, discovering the purpose of BRAC. So within itself, BRAC and TRUFUND have partnered together to launch a revolving loan fund for the Capital Region small businesses, and particularly Capital Region's minority-owned businesses and underrepresented groups within our area who face challenges and barriers to access to capital. So this is a $1.1 million fund, which focuses primarily on those businesses that were most vulnerable to COVID-19 pandemic. And again, more specifically, our minority-owned businesses within the region. So RLF, for short, has been initially funded by a 3-year EDA, which is the Economic Development Administration under the President Biden's administration, to really fund this fund for 3 years. And we look to have this particular fund stay in perpetuity throughout the life of this particular loan fund. So as BRAC, we understood the disparities that exist within the Capital Region as it pertains to access to capital for our minority businesses. And we saw it fit to partner with an organization such as TRUFUND Financial Services, whose mission is really to work with our minority business and help build their capacity and access, which would bridge some type of opportunity for success for small and local minority businesses within our area. So I have the pleasure of introducing Mr. Jay Godet, who will be able to get into the particulars of the revolving loan fund and talk about the various products that TRUFUND offers. Jay, take it away.
Well, thanks a lot, Daryl, for the introduction. And I just want to thank the organization as a whole, coming from a home of an entrepreneurial mother and being married to a woman in business. I think there's nothing more powerful than women that's taking control of their destiny by being business owners. So my name is Jay Godet. I'm a local entrepreneur and business development officer with TRUFUND Financial. And just to kind of give you guys some background, I came in contact with TRUFUND at the beginning of our entrepreneurship journey as a business owner, looking for capital. And at that, the person I was working with, in the same vein as me working with business owners, we were denied funding in my first time working with TRUFUND. But that turned into a long-lasting relationship, because even though we weren't able to obtain funding, we were able to get assistance and knowledge on how we needed to structure our business to be able to become bankable, which is one of the things that's most important, and one of the things I'm gonna talk about today. So I left that conversation with something in mind, that even though we were making a substantial amount of money, our business still wasn't prepared to be lending ready. And that kind of gave me an initiative to say, well, with this knowledge that I've just gained, I can't just use this to operate my own business. I need to use this to basically educate other business owners as well. So throughout this time that I've been in business and being able to work with TRUFUND in the time that I have, that's been the mission, is being able to help businesses understand that even if you're not ready at the moment, it's not like you're going to a traditional bank. You're not going to go online and fill out an application and you're just gonna get an email saying you're declined. It's more of a wraparound service to basically help the borrowers understand what do you need to do to get funded. So I like to tell people working with TRUFUND, it's never a no. It may be a not today, but we work to give business owners the tools that they need to be successful and become bankable. So I like to lead with that, because a lot of times when you're working with people in the financial industry, they don't always know where you're coming from as a business owner. They may not have went through those growth pains. They may not have experience being told no, or being told that you can't get funded, or why you can't get funded. And we know as business owners, that's important, because for our business to be able to grow, to be sustainable, and to reach the levels that we want to reach, funding is important. So at the end of the presentation, I think they're going to share with you all a deck that we have that shows the variety of lending products that TRUFUND offer, which ranges from equipment financing to contractor mobilization funds to commercial real estate for owner occupancy, to purchase commercial real estate as an owner occupant, COVID-19 loans, and just general business loans for working capital. What I like to stamp is the baseline criteria for all lending products. And a lot of times when we're in the weeds, you know, TRUFUND kind of was birthed in some of the regions from disaster recovery. So we know that when our business faces disaster, we go to survival mode. So we're trying to find the cheapest money, the most readily available, you know, even if all of the ducks aren't in a row, we need assistance. And that's kind of where those came from. So I like to always inform the public to let them know that it's still some baseline criteria that as business owners we have to see. And a lot of what we see when on the lending side, when packages are coming in, is financials that don't support the business making money. We know as business owners, we're great at what we do. We go out there, we bake cakes, we're gonna bake cakes real good. Does not necessarily mean that because we were busy baking cakes that we put a lot of emphasis to make sure that our books were in order, to make sure that, you know, we claim the profit on our tax returns, to make sure that we have a balance sheet, to make sure that we had a profit and loss statement. And it's those things that keeps us from being able to grow and sustain to the level that we need to be as business owners. So that's what I always like to start with, because that's some of the baseline criteria for all of TRUFUND's lending products, even the revolving loan fund, is at least 2 years tax returns. We need to see some profit. It doesn't matter if it's a lot or a little, but they want to see that you're making money on paper. I had talked to clients all the time, and a lot of times I'm sending clients back to say, hey man, you know, I know your CPA wanted to make sure that you didn't pay a lot of taxes back, but this isn't going to look good for you when we're trying to give you a loan. So we got to make some decisions. Are you looking to get a loan? If so, we may need to make some amendments to these tax returns. And that's been kind of the conversations that I've been having with businesses about becoming bankable, is I can see that you're making money. And a part of that is making sure that we weed out good CPAs from just, you know, people that prepare taxes. It's a difference. Good CPAs understand that there's tax strategy involved. Even if you're going to pay some taxes, it's a certain amount that you can structure to be able to pay with certain depreciation and certain deductions. But it doesn't mean that you can claim a $50,000 loss and go to a lending institution and be able to qualify for money. It's ways to mitigate it, and we have to do a better job at helping the community, helping our community understand who are vetted CPAs, what they represent, what they're able to do, and make sure that the business owners are working with the CPAs that's going to actually help them grow and be able to obtain funding. So the baseline criteria of all products is 2-year tax returns, profit and loss statements, and at least a year in business. We're not currently doing startups, but you have to at least be in the business for a year. So with the revolving loan fund, it's very diverse. Like I said, TRUFUND has a lot of different products, and some of them are catered to a certain mission, to a certain initiative. There's products specifically for women, products that sit specifically for minorities. The commercial real estate product is only for minority-owned businesses. And then there's products that's for, you know, anyone looking to borrow. The good thing about the RLF is the RLF fund can be used in conjunction with other products as well. So hypothetically, if you were to get a, just say you were looking to purchase your office space, and you know we're offering 90% LTV, and that's loan to value. If you guys aren't familiar with LTV, we're offering 90%. We were able to bring in some money from the RLF to actually give the borrower an additional 5%, to where they only come into the table with 5% down. Or if you have a contract loan, you have a government contract, and that government contract is for a certain amount, but you need additional money to get you over that threshold. We can pair that contract or mobilization loan with money from RLF to help you get to the threshold that you need. Or we can use if you need $200,000 in working capital, that can be strictly from a revolving loan fund. So the good thing about the revolving loan fund is that it's diverse in how it can be utilized according to the borrower's need, but it still has baseline criteria for underwriting purposes. So I like to just say to the business owners is that primarily we want to make sure that when we're looking at your packages, you know, that your tax returns are showing some type of profit. And I want to stamp that. A lot of people think that, well, if I'm not showing, you know, a whole bunch of money, I'm not making, I can't get a loan. That's not true. Lenders like to see growth. So if you took a loss in 2019, and then in 2020, you profited $10,000, and then your year to date for 2022 says that you're on track to make 25,000 or 30,000, that is substantial growth to the lender. That shows that, okay, this business is growing, they're responsible with their money, we can take a chance. And a lot of times it's about building a relationship with the lender. So just with that scenario, we may say, okay, well, we can legitimately qualify them for a $10,000 loan. And according to how they pay this loan back, we can revisit this loan in 6 to 9 months to say, okay, now you got a track record, we can refinance this loan, give you more money to help you grow in the way that you're looking to grow. So it's really about starting somewhere, but preparing yourself to start at a certain level, and us being able to help that borrower and work with that borrower to excel to the point that they're looking to go to. So it's never, and go back to what I said in the beginning. We like to say it's not a no. Sometimes it's not today. So it's not today that you may be able to qualify for $50,000 or $100,000, but you can qualify for 10. And then we could work towards getting you to that $100,000. And that was a big part of the partnership with BRAC and the development of the revolving loan fund, is to be able to give the business owners in the community a competitive edge, an additional resource to be able to utilize to help develop and grow their businesses. So I'm gonna pause right there, and you know, I think I covered a good bit, and I'm gonna just put a pin in that and open it up if anybody want to chime in or ask any questions. So you know, we can move on to the next thing.
All right. Thank you for that information and for explaining how the logistics at TRUFUND work, especially what stood out for me was maybe not now, but later, and that you all were willing to help get those to those points where they can get a yes. One quick question. We have a question in the chat. Are the loans through TRUFUND being personal guarantee, which means the individual has to personally guarantee their business loan?
So yes, yes and no. So they do use your personal credit to help you qualify for the loan. Now, the good thing about TRUFUND is that we go as low as a 580 on the credit score, but the credit does not report to your personal credit as a personal loan. It's a business loan. So hypothetically, what example I use, we had a borrower that got a loan from TRUFUND and wanted to buy a home shortly after. So they were able to identify to the bank that this loan was a business loan, because that's how it shows up from the inquiry on their credit, that a business loan. So it wasn't attached to their DTI for them purchasing a home.
All right. There's another question. Let's see. What are the interest rates on the revolving loan? I guess the current interest rate at this point.
So with TRUFUND, all interest rates on all loan products, they range from 8 to 10%. Now, there have been some scenarios to where we were able to go lower than 8%, but that is dependent upon the strength of the borrower.
All right. Thank you for that information. All right, I'm going to tell you all about our next presenter, which is coming from the LED, which stands for Louisiana Economic Development. I do a lot of work with this organization as well through some businesses that I work with. So this is just truly just more and more better for us with all these great organizations. There is help for small businesses in Louisiana. All right, so I'm going to tell you guys a little bit about the LED program. Their mission, their vision is for Louisiana to consistently outperform in the South and in the U.S. in creating jobs and economic opportunity for its citizens. Their mission is to cultivate jobs and economic opportunity for the people of Louisiana through 9 integrated economic development stages. And so I'm not going to read them all, but I'm going to pick 2 or 3 of them to read out some of their strategies, because I know that they're going to come with a detailed presentation and going to go over this. But one of the things that stood out is that they strategically want to improve the state economic competitiveness. And they also engage with local partners to enhance community competitiveness. And so with that being said, we are going to turn it over to the Louisiana Economic Development team.
Excuse me, good morning. My name is Chanel Dupuis and I am with Louisiana Economic Development. And today we have our entire LEDC team, and I'll allow them to introduce themselves.
Hi, I'm Susan Bidner. I've been with LED for 26 years. I've worked with the loan guarantee program as well as the venture capital program.
Good morning, my name is Marissa Dewan. I've been with LED for about 5 years now, and I work on the different loan and investment programs.
Hi, here in the back, Kelly Rainey. I work in the LEDC office as well with all of the business incentives here with LED, and have joined the team. I'm probably the newbie here in the group, having joined the team right at the beginning of COVID, January 14th, 2020. And I will share with you, Jay, I hear all of those comments about the education that is often required for business owners when they go to borrow money. My background is coming from a regional bank, and there were so many times when a business owner had a great business. They either needed money to expand, or maybe they wanted to buy a business. And the struggles that we saw with traditional lending was that essentially for every dollar you wanted to borrow, they expected you to have 3 to repay them. And as you all know, that when businesses are starting out or in their early stages, they have limited resources. So my career here, while short, is very rewarding to see all of the resources here under the LED umbrella for small and large businesses across the entire state. So glad to be here today. Thank you.
All righty. I'm going to share our screen. So Louisiana Economic Development has several debt programs, debt and equity programs to assist business owners with obtaining access to capital. Our current program is our Small Business Loan Guarantee Program. This program facilitates the access to capital by providing a loan guarantee. Loan guarantees aren't direct loans, but actually guarantees a loan in the event of default. The state would then be able to provide up to a 75% repayment to the lender, not to exceed 1.5 million, to again encourage the lender to extend credit to the business owner.
To qualify for the loan guarantee program, we require a minimum equity injection between 15 to 20%. This can be cash at closing or on the balance sheet and retained earnings or paid in capital. And the collateral value must match the guaranteed portion of the loan. So for example, if we're doing a $100,000 loan and a 75% guarantee, we would need the collateral backing the loan to have a value of at least $75,000. Some acceptable collateral that we take, it's fixed assets, FF&E, receivables and inventory is typically what we take. However, we do not take any primary residences. Some of our eligible business types for the loan guarantee program include lines of credit. For working capital needs, we do a lot of those. We can also do startups and acquisitions, expansions, fixed asset purchases, or purchase or construction of a building, as long as that building is at least 51% owner occupied. Some of the ineligible loan types include bars and gaming, businesses, any type of speculative real estate. And we also don't participate in any types of refinancing. It does need to be new funds. Our current program does not allow restaurants unless it is a franchise. However, with some new enhancements coming in the next few months, restaurants who have been in business for at least 2 years will be eligible. And next we'll have Kelly Rainey speak more on the Small Business Credit Initiative.
Thank you, Marissa. So we wanted to take advantage of this opportunity to share with you all today about new programs that will roll out anticipated this summer 2022 for small businesses in Louisiana. I'm sure that the acronym SSBCI or the phrasing State Small Business Credit Initiative is not foreign to anybody here on the meeting today. Originally having launched in 2010 as a direct result of the Small Business Jobs Act from the financial crisis, it was reauthorized. SSBCI was reauthorized last year in March of 2021 through the American Rescue Plan, which was the act that the federal government passed for stimulus from the COVID pandemic. Recognizing that this recovery is substantially different, the catalyst that led to the economic downfall is substantially different from what we experienced in 2010. COVID, as you all know, forced many businesses to close. It forced many women workers, females in the workforce, to go home and teach their kids remotely. Many had to give up their jobs to do that. Whether it was a woman-owned business who had to go home to help with the kids, or if it was somebody who, while working remote, realized, I can do this on my own by myself. They may realize that they can start their own business and do what they were doing before, working for somebody else. So we have seen an increase in entrepreneurship through the remote work that COVID created over the past couple of years. And then also we recognize that there are businesses who may have just started right at the beginning or right before the COVID onset, but because they were maybe in business for a matter of months, they were often left out of many of the COVID recovery programs because they had not quite been in business long enough. They were still considered too new or a startup. And then there are businesses who, for various reasons across the state and across the country, who have not been able to have access to traditional banking to gain financing to start or expand their businesses. And through several discussions, surveys, webinars, focus groups, polls, we have had input from various stakeholders to include businesses, SBA, seed groups, redos, venture capital firms, SBDCs across the state. We have taken all of this input in to really assess what the needs are across the state, because each state is different. And so through that, Chanel, can we go to the next slide, please? Sure. Thank you. So through that, LED put together a framework of new programs and also proposing to enhance existing programs. The U.S. Treasury Office, through the reauthorization of SSBCI, has allotted a preliminary allocation to the state of Louisiana of roughly $74.2 million. Now you will notice there's an asterisk next to that figure because the U.S. Treasury Office has said to every state, in addition to this preliminary allocation, there is a potential for additional funding, which would yield to Louisiana north of 100 million in federal dollars to come to our state to infuse in these programs for the benefit of small businesses. And so through that, it requires no state budget. It is federal dollars. We are rolling out these programs to help ease access to capital for financing resource. Next slide, please. Some of the overall goals in developing the SSBCI framework for Louisiana, we want to touch those underserved communities, as I mentioned, that for various reasons may not have had access in the past to traditional financing to help realize their entrepreneurial dreams. Louisiana is ranked pretty close to the bottom in terms of venture capital entrepreneur investments, and so we want to flip that status. We want to be closer to the top and certainly not towards the bottom. Therefore, when we talk about the allocations to these programs a little bit later, there is the majority slotted to our venture capital out programs for the SSBCI allocations. We also want to make Louisiana a destination for startups. We want to have high growth, scalable startups in Louisiana. We want to partner with the banking community, but also particularly with CDFIs who, through their historical mission, they are familiar and they have experience in lending to these underserved communities. So in addition to the venture capital programs I mentioned, which will include seed capital funding and venture capital match funding for businesses, we are also developing a new debt program to include the microloan program, which is really for small businesses, particularly those very small businesses, which the U.S. Treasury has defined to be 9 employees or less. So while all of our programs are catered to small businesses, the microloan program is really looking to those very small businesses, again, as defined by U.S. Treasury to be 9 employees or less, in order to help facilitate financing options, because typically the smaller businesses may have smaller financing needs. We also have developed a new program, the Collateral Support Program, based on feedback across all the stakeholders we have touched upon over the past year. This is a gap in the marketplace. And as you all know, when a business wants to start up, oftentimes they have very limited resources. They may have enough to put down for their equity injection to meet that loan to value requirement that Jay mentioned, but they may not have enough to also provide collateral, which often lenders want as well. So we will talk about a collateral support program that will roll out. And then last, we want to make enhancements to the loan guarantee program. As previously mentioned, the loan guarantee program that both Shamelda and Marissa just presented upon is currently available, open for application. But once we do have the programs finalized, again anticipated this summer, we will enhance that loan guarantee program to increase the percentage from 75% to 80%, for example. And I realize I'm getting a little ahead of myself. So next slide, please. All right, and so to talk a little bit in more detail about each of these programs, I'm going to turn it over to Shamelda for the micro lending.
Good morning again. So in our research, we uncovered that businesses have several issues they face with obtaining financing, and that's accessing smaller financing needs, providing sufficient collateral, dealing with the risk associated with startups, and getting permanent working capital needs. In light of this, LED has developed 3 programs to help address those needs. And that is the microlending program, the collateral support program, and the small business loan guarantee program Kelly just mentioned. Specific to the microlending program, it is actually a revolving loan fund. Very similar to TRUFUND, this is a pool of funds that will be made available for small business financing needs. The loans range anywhere from $1,000 to $100,000. These loans can be used for working capital needs, equipment purchases, inventory purchases, for expansion or startup projects. How this program will work is that LED will partner with CDFIs and other economic development organizations or qualified lenders to establish that revolving loan fund by way of a 1-to-1 match, where the revolving loan fund will be used by each individual organization to create loans for small businesses. All right, eligible companies are companies with less than 100 employees. Ineligible companies include gaming, anything related to illegal activities, cryptocurrency, pyramid sales, alcohol-related activities, and any restaurants with less than 2 years. Companies who are interested will be referred to participating lenders to apply for the loan. Again, the lender's individual credit policy will be used in order to underwrite these loans. This gives the CDFI or the organization a bit more leniency or better flexibility to create and underwrite these loans. Another program we have, again, as she mentioned, is the Small Business Loan Guarantee Program. The existing guarantee program is 75%, but it will be increased to 80%, and it also will expand to include restaurants, food trucks, sidewalk stands that have been in operations for at least 2 years. And again, this is not a loan, but an actual guarantee that will allow a lender or encourage a lender to approve a loan. And last, we will have collateral support.
The collateral support program was created to assist small business borrowers who are having difficulties getting approved for a loan due to a shortfall in collateral. So this program is designed to help that by establishing pledged cash collateral accounts with participating lenders to enhance that collateral coverage for the borrowers. So these pledged accounts offered to the lenders will provide a little extra comfort for them when approving loans that don't quite meet their collateral requirements. This program offers a collateral support of up to 50% of the loan amount at a maximum dollar amount of $250,000, and it's available for companies with 100 employees or less and a maximum loan amount of $1 million. So a quick example of how this would work: let's say you're a startup company with working capital needs and you need to purchase equipment for your new company. So you go to a lender and request a $100,000 loan, $50,000 to purchase equipment and $50,000 for working capital needs. That could be for payroll, marketing, etc. So the bank would take the equipment as collateral, valued at $50,000, but you're still short the additional $50,000 to meet their collateral requirements. So LEDC would then take 50% of the loan amount, in this case would be $50,000, and deposit that into a cash account with the lender to pledge to the loan. Ineligible business types under this program, they are identical to the loan guarantee. Ineligible industries that were mentioned earlier, such as restaurants in business less than 2 years, bars, gaming or gambling, or financial services. And that wraps up the 3 debt programs under SSBCI. And next, Susan Bigner will speak on.
Hang tight, I'm gonna jump in there. Excuse me, Susan, one moment to cut you off, but I just wanted to reiterate. So while we do have the guarantee program currently available at the previously mentioned 75%, that the enhancement that was shared today, in addition to the collateral support offering and the micro lending program, it's anticipated to roll out this summer. And the reason I'm saying that is because LED just submitted the final application to the U.S. Treasury Office on February 11th this year. And we now know that every state in the country also submitted their application on that same day to the U.S. Treasury Office. And so once we receive the final approval from the U.S. Treasury Office, LED will enter into an allocation agreement, which will then allow us to receive those federal dollars. And once we receive those federal dollars, these programs will be infused with the funding needed to open them up for application. So while the collateral support program and the loan guarantee program are programs that will allow the borrower to work with any lender across the state meeting the criteria here, essentially being FDIC insured and they're here registered in Louisiana to do business, we will have all of these program details that we have verbalized to you today available on our website. And then we will also send follow-up to this organization, the National Coalition of 100 Black Women, so we can circulate that to the masses. And then in addition, the micro lending program, while that program is available, will be available, anticipated again this summer across the state, the lenders to participate in that program will undergo an RFQ process. And that's important to us because we want to ensure that by the structure of the revolving loan fund, the participation arrangement that we'll create, that the lender not only has the experience, the operational skills, the management team, the internal controls in place, but just as important, really more important, we want to ensure that the lender has the mission aligned with the intent of these federal dollars. And so we're looking for lenders to share with us their historical experience in lending to these type of businesses and affecting this type of change in their community. And while the U.S. Treasury Office has shared with us that the SSBCI overall term is slotted to be 10 years, the thought process in developing the micro lending revolving loan fund program is to build a sustainable program so that the lenders selected will be able to continue to use those SSBCI dollars to make subsequent SSBCI eligible loans upon each loan repayment. And the idea, the beautiful part is really, we are wanting this to be a sustainable program even after that 10 years of SSBCI administration, possibly for another decade or another generation, thereby spurring more economic development and entrepreneurship in those communities. Okay, I'm sorry. Let's go ahead and move on to the venture capital.
Hi, I'm Susan again. With the first round of SSBCI, we were able to begin seed capital, venture capital. And that is for those companies that are just starting off. They may be an idea of someone, like Kelly said, were at home, realized that they could do this on their own and wanted to start off on their own. Seed capital is for those industries that are at that very beginning. We are putting additional funds into the seed capital, and it has to be a match with an entity of $1 of private capital to $1 of SSBCI, with a maximum of $5 million into a fund. This can be for a for-profit or a non-profit. Currently, we have some evergreens that are making seed capital. For example, we have a local company who started a protein drink company. He was traveling back and forth to Houston, and he was looking for a nutritionist nutritional snack. And he kept getting water and granola bars. So we talked to a nutritionist and they were saying, well, you know, maybe you ought to do a shake. And he's like, he really didn't have a whole lot of time to make his individual shakes. So he started talking more with this nutritionist and they came up with a protein drink. It was launched in 2011, I believe, yes, in New Orleans, and started with just a chocolate and a vanilla variety. Now it has expanded thanks to the seed capital investment and the monitoring, the mentoring from the people at the seed capital. They go in and they assist with whatever type of mentoring are needed. And now this company is selling more flavors in liquid form as well as in powdered, and it is nationwide. So this was a small individual, started off in New Orleans, and now has a company that is nationwide selling protein drinks, and you would recognize it if you saw it in the grocery stores. So that is a good example of assistance that's been given by seed capital. Now the venture capital is for those later stage companies that may be expanding or in different series of looking for funding. They can be, these investment entities can be either for-profit or not-profit. If it's a for-profit, then we ask for a $4 private capital match to $1 of SSBCI. If it's nonprofit, it has to be $2 of private capital to every dollar of SSBCI. They have a $10 million max per fund. On both of these, we are going to do an RFQ process, and we'll be looking for experience that each funding entity has from the past, what type of investments they've made in the past, what market they're looking to target, and what geographical area. Also, they will have to have sufficient funds up front to operate the fund for the first couple of years.
So we share all this with you today because outside of the debt programs, which are loans, the debt programs we previously mentioned, there are different loan types to help businesses with their various needs. The venture capital program, we want to illustrate that there is going to be another bucket of money through this SSBCI federal funding, which will be infused into these two venture capital programs and can help businesses who are just starting out with a great idea, tinkering around at home. Maybe they'll go to a technology park for some technical assistance to help really flesh out that idea. And they may end up in a venture capital space where they are the recipient of these federal dollars that can help grow and expand their business. And in the first example Susan shared, it started off as just an idea driving back and forth on a commute. And then over time and through some additional guidance, through technical assistance, really putting the resources together to expand that business. And now it's a national company. And so there is an expectation from LED to the venture capital firms that we will partner with that they also put into each of these funds for the benefit of these small businesses a large amount of money, as you can see by that match requirement there. So there will be a variety of resources rolling out this summer for small businesses and again for very small businesses as well, not just on the debt side, but also through equity investments as well. And I would just like to reiterate that while I know that typically venture capital may not have been a resource on small businesses, entrepreneurs may have typically thought about, they are also going to be required and selected based upon their overall mission to ensure that it is aligned with the purpose of these dollars. And again, this is going to go through an RFQ process in which our LEDC board will ultimately make the final approval of the program participants, just like the LEDC board will make the approval for those program participants in the RFQ process for the microloan program. And so by the time all of that is said and done, we are anticipating the timeline to be summer of this year. And so Shamanda, can we go to the next slide, please? Okay, so just to start at the beginning, so we did have to submit some information to the U.S. Treasury Office on behalf of the state of Louisiana for the SSBCI application back in December. That's a check and done. Then there was a subsequent requirement, February 11th, where the application had to be finalized. And so that has been completed as well. So where we are right now is really at that last stage here where we are awaiting a response from the U.S. Treasury Office. We're awaiting the allocation agreement for us to execute, which will allow us to receive those federal dollars. And so just thinking and reading the tea leaves, so to speak, knowing the U.S. Treasury Office has received definitively an application from every state now, we're anticipating summer when these programs will be open for applications. And I think next we might have our contact information and want to open it up for questions.
All right, let me check the chat and see if we have any questions. One question for sure is, what is the initial contact, I guess the website information, where would a person begin? Okay, perfect.
So here's all of our contact information right here. So if you have any questions or want to discuss anything we've shared today further, we're happy to do that. You can see our emails and phone numbers up here. I will also share with you that while we are providing this preview of all of our programs, hard collateral, marketing collateral, a program detail has not been published just yet. This information is not quite available on our website, but it will be very soon. And so until that time, we are happy to field questions through phone calls and emails to try to the best of our ability to answer them with what we know today.
All right. One of the questions, and I guess right before I turn it back over to National Coalition, Sister Danielle, everyone wants to know, a couple people want to know how they get the replay of today's broadcast. So go to our Facebook page, and there you can like, subscribe, follow us, and also view all the replays in this series, including the one from today. So I'm going to turn it over to Danielle as she introduced our SBA portion of the series on today. And thank you all. Thank you, LED. Thank you for your entire team. Great information. Hopefully everybody's taking a picture of this screen before she takes it out. You gotta watch the replay. You gotta watch the replay. All right, take it over then, y'all.
All right, thank you so much, LED. And now for our SBA portion, I will be introducing Miss Joanne Lawrence. She is the Deputy District Director for the U.S. Small Business Administration, Louisiana District Office in New Orleans. As the Deputy District Director for the Louisiana District Office, Ms. Jo manages the district office staff. She is responsible for providing effective leadership, management, and oversight to ensure optimization and deployment of SBA programs and services. She has extensive experience and expertise in providing business development, financial management, contracting, and procurement assistance to small businesses in Louisiana. She is a nationwide expert on the 8A Business Development Program, Hub Zone Certification, Women-Owned Small Business Certification, Veteran-Owned Small Business Certification, 7J Management and Technical Assistant, Joint Ventures, and Mentor Protege Programs. All right, Ms. Lawrence. Ms. Lawrence is frequently called upon for training initiatives across the country, and she has worked on several standard operating procedures, manuals in all areas of small business development. In August 2017, she successfully completed the Excellence in Government Fellows Leadership Program, where she improved her leadership skills, increased her knowledge of pathways into the SES program, and increased her knowledge of the SES experience. Ms. Joe has more than 47 years of service with the federal government, all with the SBA. Thank you so much, Ms. Lawrence, for being with us today, and I will hand it over to you.
Good morning, everyone, and thank you all so much for inviting me. I'm going to share my screen and so that we can start the presentation. There is a lot of information that I'm going to share. I'll go off camera to improve my bandwidth. So with the Small Business Administration, of course, we're here to help businesses start, grow, expand, and stay in business. And of course, we do that through a series of programs under financial assistance and non-financial assistance. So of course, today, our focus is going to be on access to capital, our financial assistance programs. I want to start though by sharing some information on what you want to ensure that you're including in your loan proposal. So as a part of that, I'll speak about raising money, your funding requests, of course, what's available from SBA and what's important to the lender. So in raising money, you may first look to your personal savings. Why would that be critical? Because when you approach a lender for financing, it's important for SBA and the lender to see that you have a personal investment, that there is a direct link between you and the company, that you have some skin in the game. Or you may choose friends and relatives to seek investments from them. If you choose to use funding from friends and relatives, please make clear what their role is going to be. Will it be an active role or will it be a passive role? Is this going to be a loan that you're going to repay at a later date, or is this actually going to give them ownership in the company? If it's going to be a loan, make sure that you clearly defined what the repayment strategy will be on your part. If it's going to be that they'll have an investment in the business, then again, you want to clearly define their role, because this is your business, it's your passion, you have goals and objectives. And if you're going to allow friends and relatives to have a say in what you're going to do, you want to make sure that that does not extend to the point where they're actually controlling what you want to do. Of course, banks and credit unions, this is where SBA gets involved with providing guarantees to loans if you're going to use the SBA guaranteed loan program, or the bank or the credit union may decide that they can make that loan to you without SBA's assistance. And of course, venture capital firms. When you're preparing your funding requests, consider what your current funding requirements are. What do you need right now? Also, when you have an opportunity to sit down with the lender, if you know that in 5 years or 6 years, you're going to be diversifying or expanding, or you expect to purchase additional equipment or owner-occupied facilities that's going to come up within the next 5 years or 5 or 6 years, be prepared to share that with the lender as well. Know the type of loan that you're going to need. Is it a long-term loan, like something for machinery and equipment or for real estate? Or is it a short-term loan like working capital or revolving line of credit? Be clear in how you're going to use the proceeds. Why do you need these funds and how are you going to use them? What collateral do you have to offer? Now, SBA is not a collateral lender. And what that means is that we will not deny a loan solely for lack of collateral. However, between SBA and the lender, we would expect that you would pledge whatever collateral is available. The terms, in terms of the interest rate and the amount of time that you need to repay the loan, You'll be able to negotiate that with the lender. SBA guarantees the loan, but you'll negotiate those terms with the lender. So that's why whenever we receive a call about lenders, banks, credit unions, whomever who may be making loans, we first direct you to your lender of account, where your bank, where you do your banking, because they're the ones who know how much money you have running through their bank. If and they would be the one who will know like what kind of terms they want to give you. So we always suggest that you start with your lender of account. And then, of course, your investment. How much are you investing in this business? If you've started already and you've started purchasing things that you need for your business, ensure that you keep clear records of what it is in terms of what you've already done. I like what Jay said at the beginning of this session in terms of record keeping. That's going to be key when you start seeking financing. So I mentioned the types of loans. The short-term loans are the lines of credit, working capital, and the accounts receivable financing. When it comes to accounts receivable, generally anything older than 90 days, the lender will consider that as uncollectible. With lines of credit, that may be a revolving line, or it may be something that you just have in place in case you need it. Last week at one of the sessions, one of the ladies shared that she went to her bank and she said, well, I want a line of credit for $50,000. And the banker asked, why do you need this line of credit since you have X amount of dollars in the bank already? And her response was, I don't need it now. I just want it there when I need it. So, and then of course, each year she'd go back and ask that the line of credit be increased. Working capital, those short-term needs, and generally with SBA, we can approve terms on a working capital loan, working with a lender up to 5 years or 5 to 7 years, whereas the lender may only want to go up to 3 years or 3 to 5 years. And then you look at your long-term loan. If you're looking to buy equipment or vehicles, real estate or furniture and fixtures, those things that you know you'll need a longer time to pay off that loan, make sure that you're not taking a short-term loan. Make sure you're not asking for a line of credit or working capital loan or a loan to finance receivables. Because with equipment, generally with an SBA guarantee, we can go up to 10 years, maybe 15 years, depending upon the useful life of the equipment. So you don't want to get stuck with a working capital loan that you have to pay off in 5 years when you actually need a long-term loan. When you're preparing your loan proposal, you want to be able to present exactly what it is that you need, how much you need, how you're going to use those funds, what collateral you're offering, and then what is your investment. All of this is going to be important to the lender as you sit down and you speak to them about what you want, but also in your proposal package. And your loan proposal, of course, is going to include the business loan application. Now, you'll be using the application that the lender uses because SBA is providing a guarantee to that lender. They also want to see your personal financial information, and that would be a personal financial statement. Some lenders want it within the last 45 days. Some may say 60 days. It depends upon the lender, but that would be required on all owners, principals, and officers that are in the company. And then the lender will want to see your management resume, or management's resume rather, and the owner's resumes. Why would that be important? I'm glad you asked. Looking at your resume will give the lender an idea of what your experience is in that business. The history of the business. So if it's a new start, I know like some of the organizations do not do loans for startups. SBA can guarantee a loan on a startup. So your history may not be that long, but what we're looking for in that history is an overall view of what the business does, what services you offer, how long you've been in business, what your experience may be in this industry. And then of course, the business debt schedule. We want to make sure that when that loan is approved, that we're not overburdening you. So you'll be asked to provide a schedule of debt of the business. So I mentioned the history of the business, and I mentioned telling us what it is that the business does. So that's the nature of the business, but also what's your legal structure? Are you a sole proprietor, partnership, an LLC, or a corporation, S Corp or C Corp? You want to make sure that you include that in your history of the business. And then the ownership structure, that's going to give us who the owners are and how much they own in the business. When you're putting together your the management plan, we need to see who the owners and managers are in the company and what their areas of responsibility are. Who's in charge of the day-to-day management? Who makes the decisions? Who signs the checks? Are there any other key individuals who may be able to bind the company or speak for the company? That may be an office administrator or a project manager. And then if you have a bookkeeper or a CPA, and then who's in charge of selling the business, the products, or marketing the business? With your loan proposal, you want to include a monthly pro forma income statement for 12 months. And that pro forma income statement will include what the picture, your financial picture looks like after the loan is made. Your business financial statements, which would include the income statement or profit and loss statement, your balance sheet, and at least 3 years of tax returns if you've been in business for that long. And if you file your tax returns with your business tax returns with your personal tax returns, like filing a Schedule C, that's fine. You just need to make sure that you include that. An interim financial statement, something no older than 45 days. Some lenders may say no older than 90, some may say no older than 60. It's up to the lender. And just as that monthly pro forma income statement, what it looks like after the loan is made, a pro forma balance sheet would also may be requested. And then your cash flow projections. When you are preparing your cash flow projections, there should be some fluctuations in the month-to-month condition of the business. So generally what we'll see when someone is preparing a cash flow statement, you know, the income amount is all the same, it never changes, but also the expenses never change. And there are fluctuations monthly with expenses. So you want to make sure that you include those fluctuations in your cash flow projections. Your personal tax returns, most recent 3 years, and aging of accounts receivable and payable. Accounts receivable will let the lender know how well you collect your debt or what's owed to you, and then accounts payable, how well you pay your debt. And then your marketing, what is it that you do? And how do you sell those products? What's your trade area? Are you local or are you nationwide? And who's your competition? And what's your current customer base? So I've discussed a lot of this already, but what I want to point out on this slide is outside employment. It's okay if you have another job and you're starting a business. What that says to the lender and to SBA is that you will not be relying totally on the success failure of that business to maintain your lifestyle. You won't be relying on that business to pull funds out to continue your lifestyle. So it's okay if you have outside employment. I mentioned the financial statements already and the tax returns and the aging of accounts receivable. When you're putting together your projections, make sure that you're analyzing your market. SBA, through our resource partners, have resources available that can assist you in doing that. Make sure that you're setting clear objectives and those that are reasonable and attainable. Include that historical data. Use that in preparing your financial projections if you've been in business for any amount of time. This is just the traditional format for a business plan. This information is available on SBA's website, but when you look at that executive summary of your business plan, that should be able to give the reviewer an overall view of your business and what's in the business plan. Make sure that you're being clear about what you offer. You don't need to be a jack of all trades. You want to stay focused on what you do, what your niche is. That lets the lender know that you're not going to be dibbing and dabbing in a whole lot of things. What's important to SBA and the lender above all is your ability to repay the loan from earnings of the business. Again, going back to something that Jay said, continuing to show a loss on your tax returns is a negative, because what that's saying to a lender in SBA is that you're not generating sufficient funds to repay the loan. Someone with good character, a feasible business plan, your management expertise, your commitment to the success of the business, that there are sufficient funds to operate the business, what's your skin in the game, and is there collateral that you can offer? So as we look at SBA's financial assistance programs, our loans are made under the 7A loan program, and 7A just has reference to Section 7A of the Small Business Act. Under those programs, we have, under the 7A loan program, we have the SBA Express loan, where we have approved certain lenders to be express lenders. And currently under the Express loan program, we can guarantee loans up to $500,000 with a 50% guarantee. We offer lines of credit under our Cap Lines program. The Community Advantage loan program is for those underserved markets, those individuals who have difficulty getting funding on reasonable terms. And we work with CDFIs in that program. We also have funding available for our veterans under our Veterans Advantage loan program. If you're engaged in exporting or international trade, or if you're interested in engaging in those international trade or exporting, we have programs available to assist you with that. If you're looking to purchase owner-occupied land and building, the 504 loan program is available. Our Small Business Investment Company program, microloans, and disaster assistance. And we're going to talk about each of those in detail. So generally, SBA can guarantee a loan up to $5 million. Oops, I'm sorry, guys, I went too far. Let me go back. Sorry about that, too quick. But generally, we can guarantee loans up to $5 million. And those loans are made through either banks or credit unions or other non-bank lenders. Our guarantee to the lender is 85% on loans up to $150,000 and 75% on loans above $150,000. During the pandemic, to assist small businesses in getting the financing they needed, we were able to guarantee loans up to $5 million, and our guarantee was 90% but that ended on September 30th, 2021. The maximum exposure to any one borrower is $3.75 million. And what our guarantee does, we're not here to compete with lenders, but rather what our guarantee does is to encourage lenders to make loans to small businesses. So you may be new in business and the lender may not be making loans to new businesses or startups. And for some lenders, a startup is when anyone that's been in operation for less than 2 years or 3 years. You may approach them and they say, okay, we can do this loan with SBA's guarantee. And then of course, our express loans with that maximum guarantee of 50%. So as you approach the lender, you're not approaching them asking them for an SBA loan, rather you're approaching them asking them for a small business loan so that you can speak to their commercial loan officer. And then if the lender decides they need SBA's guarantee, they will send the loan to us with the terms and the interest rates. However, we establish limits on what the lenders can charge in terms of interest rate. Some lenders will look at making a $25,000 loan or a $50,000 loan as taking as much paperwork as making a $150,000 or $250,000 loan. So to provide an incentive for these lenders to make the smaller dollar loans, SBA allows them to charge a higher interest rate. So for loans with maturities of less than 7 years, and if the loan is up to $25,000, the interest rate would be prime plus 4.25%. For the loans above the $25,000 up to $50,000, it's prime plus 3.25%. And for loans over $50,000, the maximum the lender can charge is prime plus 2.25%. Now, when the loans exceed 7 years, we allow them to charge a little bit higher. So if it's up to $25,000, it's prime plus 4.75. Up to $50,000, prime plus 3.75. Over $50,000, prime plus 2.75. So typically, with the SBA guarantee, longer terms are given to repay the SBA guaranteed loan, and the purpose of that is to help in improving your cash flow. So with our use of proceeds, as I mentioned, our proceeds can be used for new start companies, for startups, expansion, working capital, purchasing inventory, or the raw materials that you need if you're a manufacturer, machinery and equipment. Also, if you need to restructure debt, or you may refer to it as debt consolidation, SBA can guarantee a loan for debt consolidation as long as the lender is not in a position to sustain a loss, and there's going to be at least a 20% improvement in your working capital. With our express loan program, as I mentioned, this program can go up to $500,000. There are certain lenders that have been approved as express lenders, and the interest rate is slightly higher. If it's $50,000 or less, it's prime plus 6.5. If it's over $50,000, it's prime plus 4.5. And the maturity can go up to 10 years with SBA's 50% guarantee. So we put the express loan program in place to streamline the process, make it easier and quicker, faster rather, for you to get the funding that you need. And it can be used as a line of credit. With the Community Advantage Loan Program, the maximum is $250,000. But notice the amount of SBA's guarantee. If it's under the Community Advantage Loan Program and the loan is up to $250,000, our guarantee is 85%. And the interest rate is prime plus 6%. So this is designed to assist underserved markets And we work with the CDFIs, the Certified Development Companies, and micro lenders and other SBA intermediaries who serve underserved markets. The terminal loan will depend upon your ability to repay. So it's not necessarily based upon your balance sheet or your profit and loss, but rather on your ability to repay the loan. And the maturity will range for working capital, machinery, and equipment up to 5 to 10 years, and for real estate, 25 years. Oops, I'm sorry, guys, my screen froze. Okay, let me go back. So with our Veterans Advantage Loan Program, this is made under our Express Loan Program as well, up to $350,000. And the guarantee for our veterans is 85%. For the Veterans Loan Program, there is no upfront guarantee fee that's charged to the lender, and the terms are up to 10 years for equipment and 25 years for real estate. This Veterans Advantage Loan Program is not only open to our veterans and service members, but also to service disabled vets, active duty military service, those who may be transitioning out of the military, reservists, and National Guard, but also the current spouse of any veteran, active duty service member, any reservist or National Guard member, or the widowed spouse of a service member. So this program is, as I mentioned, is open to the veterans as well as their spouses. If you are looking to purchase land and building, or if you have the land and you want to construct a building that's going to be owner occupied, the 504 loan program will be the best program for you because it provides long-term fixed financing. And if you are a manufacturer, we can make a loan up to $5.5 million to you. The maturity will be 20 to 25 years for real estate and 10 years for heavy equipment, including movable equipment. If it's new construction, you would have to occupy at least 50% of the facility with the intent that you're going to occupy the entire facility. If it's an existing facility or building, you would have to occupy at least 51% with the intent that you eventually will take over the entire building. The interest rate is generally below market rates, and they are fixed. The maximum loan amount is up to 40% of the total project cost. And this is how that works. An SBA lender provides a loan for 50% of the project with no SBA guarantee. And then you would work with a certified development company or CDC who finances the remaining 40% with SBA's guarantee. So if you are an existing business, that means that generally your contribution toward this project would be 10%. If you are a startup or a new business, your contribution would be 15%. For our microloans, these are loans up to $50,000 where SBA provides funding to our intermediaries, and they loan these funds on behalf of SBA and they service the loan. The interest rate's a little bit higher, is between 8 and 13%. However, with the microloan comes technical assistance and free business counseling. And if you want to pay the loan off early, there is no penalty for early repayment. I mentioned the exporting and the assistance that's available from SBA. SBA provides STEP grants or STEP Trade Expansion Program grants. LED is the organization to which we have provided the STEP grant. And through this STEP grant program, there are grants available and training. So the grants can assist you in participating in foreign trade missions or in trade shows. It can also assist you in obtaining services to support foreign market entry. Also updating your website or translating your websites to foreign markets to attract foreign buyers, and also assist in designing international marketing products or campaigns. So this is available to those who are engaged in exporting or international trade. We also have the Export Express loan. The maximum is $500,000. The interest rate can be fixed or variable, but it may not exceed prime plus 6.5%. So you're actually sitting down with your lender in negotiating your interest rate. So if you're like a good customer with that lender, they'll probably give you the best interest rate that they can offer. The terms of the loan will be based upon the use of proceeds. So if it's for real estate, like you are purchasing or building a warehouse, up to 25 years, for equipment, up to 10 years. If it's a line of credit, the maturity is 7 years. And on the express loan, SBA provides a 90% guarantee. For international trade loans, these are there to help you expand or enter into international trade markets, but also to improve your competitiveness. You may be having difficulty penetrating those markets because someone is able to sell what you're selling at a cheaper price. So this program can help in improving your competitiveness. The maximum loan amount is $5 million. The interest rate, the maximum is prime plus 2.75%. Again, you're going to negotiate with the lender. The maturity will be the same, 25 years for real estate, 10 years for equipment, and SBA's guarantee is 90%. We also have the Export Working Capital Program. And what you'll notice with all of these international trade and export loans, SBA's guarantee is 90%. The maturity on this Export Working Capital loan up to $5 million is 1 year with a 3-year maximum. And it can be used to assist you in financing your receivables or as a line of credit or in purchasing inventory to make the products, those raw materials that you want to export. Under our investment capital program, which is the Small Business Investment Company Program, SBA approves lenders to participate, investors rather, to participate in this program. We regulate it, but these are private investors who use their private funds along with SBA's guaranteed capital to invest in your business. There are certain businesses in which they are interested. So not all of the investors participating in the SBIC program are interested in engaging and investing in all types of businesses. And the SBIC may participate as a limited partner or invest funds. So SBA provides guarantees to these investment companies, and what you will receive will either be a loan, equity injection, or a combination of both. So each SBIC is going to have its own investment profile. They'll have a targeted interest in certain industries or a certain location. They may even want to only invest in companies that have been in business for a while, basically that they're not new businesses. Looking at the type of financing, either investment or a loan, and the size. So that would be determined by that SBIC's lending or investment profile. So some of the considerations for the small businesses are how long you've been in business, whether or not you're profitable, and if there is sufficient cash flow to pay interest if they approve a loan for you. We still have funds available under the COVID EIDL, Economic Injury Disaster Loan Program. However, the new application period ended December 31st, 2021. So if you had an application that you submitted by December 31st, 2021, it will be processed. If you were declined, you can still request reconsideration of that decline. And if you have an approved loan, you can request an increase of that loan up to $2 million. So some tips as I prepare to end this portion, some tips for you to help you in your success. Get some guidance. You know, you want to develop a working relationship with some of SBA's resource partners. So we have SCORE, we have the Small Business Development Centers, we have our community navigators in Louisiana. We have 4, which are the Urban League of Louisiana, the Iberia Industrial Development Foundation in New Iberia, the Louisiana Black Chamber of Commerce, and the Greater New Orleans Region Black Chamber of Commerce, as well as our small business development centers and our women's business resource centers. Develop a relationship with one of those resource partners and get some guidance and assistance. You don't have to go this alone. SBA has resources available to assist you. Be specific when you are defining your lending needs. So you look at whether or not you need a loan right now, or if this is something that you need in the future. Be clear about what you need and how much you need and how you're going to use the proceeds. We can't stress enough how important it is to keep clear records where you're tracking your cash, your inventory, your accounts receivable, your accounts payable, payroll, sales, purchases, loans payable, owner's equity, and retained earnings. So of course, all of the lenders will want to see this information in balance sheets and profit and loss statements, but also keep in mind a lot of weight will be placed on the business tax returns. If your lender is not willing to make the type of loan that you need, then talk to multiple lenders or use SBA's lender match tool, or you can reach out to our office and we can speak to one of the lender relations specialists to see who's making the type of loan that you need. And then check all of your options to determine what's going to be the best product for you. You're hearing from SBA, you've heard from LED, you've heard from BRAC and TRUFUND. What's going to be best for you? Of course, we love to have you come get some of the money that's falling out of the sky that was on my previous slide, but we want you to do what's best for you. And also under our Capital Access Program, I just want to mention this, is our Surety Bond Guarantee Program. So if you're engaged in construction, just know that SBA can provide bid, payment, and performance bonds under our Surety Bond Guarantee Program on contracts up to $6.5 million. And we've streamlined the process for getting a Surety Bond Guarantee from SBA. And if it's a federal contract, we can provide a guarantee on a contract up to $10 million. Of course, all of these programs are for small businesses. We're here as the Small Business Administration to assist you in your growth, development, and success. So that's the end of my presentation. I'll take any questions. This is my contact information. Generally, the best way to get me is via email, joe.lawrence3@sba.gov, or you can call me on my direct line, which is the 504-589-2879 number that rings on my computer. I don't know if you all heard that while I was presenting, but a call was coming through on my computer. And then, or my cell, 504-256-5293.
All right.
So that ends my presentation. Thank you all so much.
Thank you, Ms. Joanne, for that awesome information. We're going to take some questions. I know we have some. Thank you. That was a wealth of information. So just as I mentioned before, going to say it again, to watch the replays is simply go to the National Coalition of 100 Black Women, the Baton Rouge Metropolitan Area on Facebook, and you can watch the replay there as well. So the first question that I saw was, if I already have issues, I don't want to use the word issue, if I have challenges with a current SBA loan that I may have got, like I guess like from a general website, can the SBA, do you all have a point of contact of helping someone navigate through some of the challenges they may be having with the current SBA loan that they have that they may not have gotten directly from you?
Okay. So they have what do you mean they have an SBA loan but didn't get directly from us? I don't understand.
I think they're speaking more of the PPP, EIDL, you know, how they had different lenders, different places offering those PPP and EIDL loans. And now they're at a time, I don't know what the issue is, but I guess they want to know if you all are positioned to even offer some help.
Okay, so with the PPP loan, it depends upon what assistance they need, because right now what is happening is we are processing the forgiveness applications. But if they are having difficulty with PPP or with COVID EIDL, they can reach out to our office. Both of those, even though the PPP was a Department of Treasury program, it was given to SBA to manage, so they can reach out to us, our lender relations specialist, the 504-589-6685 number, or they can, and I'll put this in the chat, or they can reach out to me and I'll see what I can do. Same thing for COVID EIDL, okay? Those are SBA disaster loans. So just reach out to us, let us know what the issue is, and we'll see what we can do to assist. Both of those are SBA programs.
All right, thank you for that. And the next question is, you mentioned earlier about you all have a resource or a department that handles helping people get their documents together. Maybe it's a whole lot of information. They don't know which loan to apply for, what documents are needed. Do you all have something like that that would help to walk them through getting it together?
That would be our Small Business Development Center or our Women's Business Resource Center. Those are the two resources that are available. So we have small business development centers throughout the state that are co-located with the universities. And with our Women's Business Resource Center, the Urban League is the host for our Women's Business Resource Center. So those would be the two resources that are available to assist with that.
All right, those were the questions that I had. I'll double, triple check the chat. And let's see. Now, one last question, and then I'll turn it back over to my National Coalition sister, Danielle. The SBA, you're located in Louisiana. So are these services, just in case you never know where someone's watching from, are these services available nationwide? Or the things that you talked about, are they just for Louisiana?
So SBA is nationwide, okay? And so the services, the types of loans, all of that are available nationwide. Now in Louisiana, we get engaged with a lot more hand-holding, if you will. We're a lot more closer with our businesses. But they may not find that at their district office. It just depends on the district office and their caseload. But these are nationwide services that are available. Each state has small business development centers. The agency is working to expand its women's business resource centers across the country. Each state has SCORE offices available, and each state now is served by a community navigator. So those resources are available nationwide.
All right, thank you so much, Ms. Joanne. Thank you for all of the information and for sharing your contact information with us. That is priceless. Thank you so much.
You're welcome. I mean, that's why we're here, to be of service.
Thank you. Sister Danielle?
Well, thank you, everyone, all of our presenters. This was some awesome and amazing information to take us to the next level in our business journeys. We're hoping that we have provided 2 parts of the series to you, and we have 2 more to go, but right now it's survey time. And in the chat, I did put the bit.ly link. That is for us to be able to give you the information that you need that's relevant to growing your business, growing yourselves. And so we would love feedback. Any feedback doesn't have to be good feedback. We just need to receive some type of feedback so we can know what we need to change or tweak to make sure that our events are what you're asking for. And now I'm going to turn it over to Madam First VP, Sister Dinesh Piper.
Hello, everyone. I am so excited about what was presented today. And at this moment, we are here to pull at your pocketbook because these programs cannot be brought to you without funding. So if you find it in your heart to donate to the National Coalition of 100 Black Women Incorporated Metropolitan Chapter, please take out your phone. You can use your camera and scan this QR code, or you can go to our PayPal Me donation site and you will be able to make a donation to us so that we can keep bringing quality programs to you across our platform. So we thank you for being here with us, and please take your phones out, take your pocketbook out, and make a donation. Thank you. Thank you, ladies. Danielle?
Thank you, Madam First VP. And now we are going to tell you about some upcoming events that the chapter will be having. We are going to, again, we have 2 more parts of this amazing series where we will be discussing on March 30th from 11 a.m. to 2 p.m. the DBE certification and Hudson initiative. And we're also going to be talking with the LSBDC, the Small Business Development Center at Southern University of Baton Rouge. So there is the registration link. You can sign up there on the bit.ly/biz certifications. We also have something coming from our Public Policy Committee, where it's Break the Bias in honor of International Women's Day and Women's History Month. That will be held on Wednesday, March 23rd at 9:30 a.m. You can also register at the bit.ly/Break the Bias BR. Make sure that you are putting that information in the way that we have spelled it, because sometimes, as we know, if you do not have it spelled the way we have it on there, then you're not going to be able to access that. And we do not want you to miss the amazing events that we have coming up. And so that is all from me. I hope that you have enjoyed the event today. Do we have any other comments from our moderator, Sister Martin?
Yes, I just want to say thank you to everyone that took time to tune in, and you already know what I'm about to ask you to do. Go to our Facebook page. Go to our Facebook page, like, share, comment, invite others to watch the replay. This will also allow us to be able to share this information at no cost to our community. So we want to make sure that we're doing our part to empower our community. This is It's part of the efforts that we do here. So once again, thank you all for your time.
And that is all, and we will see you all again on March 30th at 11 a.m. Everyone take care and enjoy the rest of your day.
Goodbye, y'all.